Hey everybody, it is the weekend ahead of the start of Q2 2019, so just taking a quick look at the S&P 500, kind of going over what happened last week and what we're facing as we come in to a brand new quarter. So here is the 5-minute chart. Over on the left side you can see this is where we made our 2019 high, not last week, but at the end of the week before. And then some bad data hit us out of Europe the night after that. As we waited for the Friday open, and we wound up gapping down open and just sort of selling off down to there. And then we came in on Monday and we sold off to a little bit lower low than we had made on Friday. But then we sort of took off from there and quietly sort of climbed our way back out of the hole as we went on to trade through to the end of the quarter to end on Friday. And all week long, what we had done was we traded all the way down to test the low area of what we had traded back on October 10th, which was the first really big, juicy, meaty, terrifying flush out down day of the Q4 sell-off. And the low of that day was 27.84 and change, and that's really what we have been testing at our lows this week. On Monday, the low came down to 27.85, and that was challenging a gap that had been left on the way up into this range that was still left behind from the 11th of March. And we did not quite fill that gap in all the way. And so it's almost as if the market's saying, it's afraid to take a look below that area that we printed on October 10th because maybe it'll be really hard to get back over that level again if we roll back down below it. So keep that in mind. I mean, if you are really a serious seller and you're not buying into any of the positivity going on in this market, and you really don't want to even get involved in calls, and all you're interested in is trading the short side, and that's a viable way to trade, but just know that you need to see this 27.85 to 84 area break. Otherwise, you just trade down to that, and if you don't want to buy the dip and trade the bounce back up, that's fine. That's your prerogative as a grown adult not to trade that. But just know that as we bounce off of that, that's the market saying that that they're supporting that, and that you're not going to see lower until this area breaks. And we've seen it hold support quite a bit throughout the month of March. So that's the deal with that, and that's why it keeps holding every time we get down to the 2780s. Okay, and if you keep saying that you want to use the 2800 handle as your area to short, that's fine, but know that you're only getting 15 points of downside from there, because 2784 or so is a very strong level of support. If and when that breaks, then you've really got a good trade going. But if it keeps holding, you need to be more patient, and you need to be having the guts to short these highs instead, because otherwise all you're getting is a 15-point range if all you ever do is try to short the break of 2800. Okay, anyway, going back to what's going on this week, you can see that we built our way up, but our highs kept running into this 28, 29, 44 level. That's this halfway back line right here. And you can see once we broke it, and we tried to hold it a little bit here on Friday the week before, and then flush down below it. And then when we bounced back up, we couldn't get anywhere near it, traded down lower on Monday. Tuesday, we came in, we gapped up, we tried to trade past this level, but couldn't do it. And then Wednesday, they flushed us down one more time, held a higher low against Monday, and we climbed back up. And it took us a gap up open on Friday in order to get out over the 10-day simple moving average. And we pretty much spent the entire day on Friday trying to battle this 28, 29, 44 level. Got to the point of where I felt like maybe there's like some sort of like algo scraping program that like can even get into private accounts, and then they look for levels that people are typing out and purposely like making sure that nothing could penetrate this level. And if you think I'm nuts, I mean, look at this day on Friday. Who can argue with the idea that this is clearly a level of support and resistance that's being traded around? And luckily, at the end of the day, when Kudlow came out and sort of trying to sell and reiterate to the market that this administration wants the Fed to get in there and do like a serious cut, and that maybe that will spur growth not just in the U.S. but worldwide, and get the whole market going again, because like I said a little earlier in this video, we had a nice 2019 high going, and then we got that shitty data overnight coming into Friday, and it rolled the whole thing over, and it took us an entire week to climb out of the hole that it put us in. And we've got a huge bunch of data coming our way once again as we start Q2 here over this weekend and overnight going into Monday's session, and again overnight going into Tuesday's session. There's lots and lots of economic data coming out from all over the world, not just here in the US, but Europe and Asia. And, so we could be facing another situation like we had a week ago where we trade up to a great high here in the US, but then roll over overnight coming in the next day. All right, so here was our at the end of the day, we broke out and we made a higher high on the day, but sold off down to close below 28.35. Our high in the day was 28.36, right there in the final 5 minutes. And here was our Q1 2019 close, 28.34.40. I have the feeling that this level will wind up becoming one of those edges like this one that we keep trading around. But for now, that 28.34.40 where we close the quarter to this 28.29.44 level that marks the halfway back of the day that we traded on 10/10/2018 are going to be very important, as well as the 10-day simple moving average. Okay, so let's take a look at the S&P 500 daily chart here. Here's the daily chart with everything cleared away. Here is that day on 10/10 that I keep talking about. And what was going on there, when we look at it a little more closely, is that we came in and we gapped down that day below the 50-day simple moving average, and then just everything hit the fan as the day went on. It started out as a bit of a nasty little sell-off, but then something happened in the afternoon that this 28.46 level, sort of broke, and then we tripled the day down from there. But the halfway back on this day is that 28.29.44 level. And it seems like if we could just get above that, then we have a much better chance at trading in the upper end range of this day. And if we can get out of the top of the range of this day, fill the gap to the previous day's close, then we're finally sort of up out of this hole that we fell into, and maybe we can trade back towards the all-time high and move on to a higher high over S&P 500 3000. All right, and what are the things that can help us get there? Okay, aside from better economic data worldwide showing us that there isn't like a slowly encroaching worldwide recession beginning, well, we've got the U.S. trying to support everything, and in terms of what the simple moving averages can show us, we can see that price in terms of the 50-day, which represents about a quarter of trading, it traded up through the 100-day simple moving average back at the beginning of March, and you can see this beautiful rally that happened on that. And as this cross was approaching, we had been selling off into it, and I remember posting that I thought that what was going to happen was that we were going to come down and break this, because that this was, the culmination. This cross was the culmination of all this buying that had been going on all year already, and that this was going to be met and treated as an overbought event, and we were going to trade down through it. And in trading down through this and breaking this cross level here with these two simple moving averages, that we would trade on down and back test the lows of 2019 and maybe go fill in some gaps and take care of some business left behind us back in December. But instead, what did we do? We traded up like this. So now here we have this coming our way on Monday. We have this golden cross, which is even more important, because now we have that 50-day price crossing up through the 200-day. The 100-day represents about 6 months worth of closing prices. The 200-day represents about a year's worth, and the 50-day is your quarterly closing price. So finally, we're finally getting things balanced the right way with the 50-day about to cross up through the 200-day. And we did have a little bit of a sell-off coming into this, but we've already sort of turned the corner. And on Friday, if this was a front run of this cross that's coming our way on Monday, then we are going to break out and we're going to trade much higher. However, there is that uncertainty of economic data, and like I said, there is a ton of it coming our way. I'm going to post the link for the site that I've been using lately. It really gets down and shows you even more detail about things that are coming out and the times specific And you can take those times and you can check an ES chart and see how the market just sort of rolls over when that data comes out and when it's bad. And it starts in the overnight session and it carries on here into the US. So maybe what traders are saying here on Friday, we're just buying ahead of that. And, you know, we've got to come out of the gate and we've got to be strong next week. Otherwise, we run the danger of this same fear that happened back here, where we sell off down here, break this crossing level, and we're going to come all the way down here and test this 100-day. And that would take us all the way down to test the 2700 handle if it played that way. All right, so looking at our fully marked up chart here, you know, we traded up and finally broke above and closed above the 10-day simple moving average on Friday. We closed above the halfway back of 1010, and we closed up above this 2833 level, which was a previous closing high, and we've sort of used it as an edge. An edge level being something that just sort of becomes a level that gets printed, and we come back and revisit it again and again and using it as support and resistance. Okay, and if we can move out from above Friday's high and work our way back towards these 2019 highs that we set a little over a week ago, then we move on out and we move towards filling that gap to that happened between 1010 and 10.9 that I showed you back a little earlier in the video. And if we come in and we get affected negatively by that data that's going to come out overnight before we even get our session going for Q2 on Monday, and we start to back test, then we're just going to go back through everything that we did last week. We're going to go back down and test the 20-day, and we're going to go back down and test this 2784 level. And as I said at the beginning of the video, if you are really bearish this market and you really believe that this rally cannot be sustained, what you're going to need to see is that 2784 level break and hold down. And if it does, then most assuredly, I'm quite certain that we will, at the very least, test this crossing of the 200 and the 50-day simple moving averages, break down through that, and likely go ahead and test all the way down here to the 100-day. There is a lot of stuff, and I'm not saying it's all going to happen in one day, obviously, but there's a lot of stuff that could hold us and make us chop a while on the way down. But that would be your bearish setup, and it would all start with breaking Friday's low and filling the gap to Thursday's close and moving on down through the steps from there. Okay, I hope that this helped you out. Hope this also helps you understand how to better read the charts and the information that I keep squawking out there in the tweets when I keep reiterating these levels. I just assume that at some point in time you've heard it in a video or read it in a tweet and you know what I'm talking about, and that we're having a conversation between two traders. And that's why I keep repeating those levels in the tweets. Anyway, enjoy the rest of your weekend. Hope this helps you out. As always, good luck and good trading.